welcome back everyone, and thanks for joining me for this month's Vanquish market report. This report is May 2025, and as always, I'll be walking you through exactly what's been happening in the markets over the last few weeks, what's driven the moves, and how our systems have performed in this backdrop. I'll be screen sharing this report here. You can follow along as I scroll, and I'll unpack things in real time. You'll notice I'm tucked away in the corner of the screen. It's all about data, not my face, so let's get into it. So, starting with the macro context, April and May were intense, to say the least. April gave us early signs of uncertainty with US policy shifts, but May really dulled things up. We saw markets reacting sharply, almost impulsively, to every fresh data release, which tells you something about sentiment. It's defensive, reactive, and in many ways, directionless. Forex markets in particular were incredibly sensitive. A real risk of tone developed across the board. The US dollar was front and center throughout, acting as a lead variable, dictating the broader direction in major pairs. At the start of the month, we had the Federal Reserve take a hawkish pause, so no rate hikes, but also no indication of a cut. Powell made it clear they're watching trade tariffs closely. That uncertainty around fiscal direction, deregulation, immigration, all these variables are now part of the Fed's inflation outlook, so they're essentially in wait-and-see mode. At this point, markets were expecting cuts in June or July, but pricing in about 50-50 chance of something in September. Okay. So, geopolitics. Now, if that wasn't enough, geopolitics really took a turn. Russia ramped up the conflict in Ukraine. We had a major flare-up between India and Pakistan, missiles exchanged, intense air engagements, and it took US intervention to pull things back. Then, on top of that, you had growing disagreements between Israel and its allies over Gaza. So the global risk environment just shot up. And of course, that initially strengthened the US dollar, its classic flight to safety. On May the 12th, we saw the dollar index touch 101.79, and that's 1 month high, bouncing off the lows we saw in April. But then came the reversal. We got a softer than expected US inflation number. CPI came in at about 2.3% on the year, lower than the March print and market expectations. That immediately triggered talks of cut rates again. And then Moody's dropped the hammer. They downgraded US debt from AAA to AA1. That downgrade triggered a wave of sellers in the dollar, and the market pretty much panicked. Investors started paying close attention to the American budget position. That one big beautiful bill, Trump tax and spend packages, adds $4 trillion to the deficit over a decade. Moody's is now projecting federal debt to balloon to 134% of GDP by 2035. So from a macro standpoint, that's a massive overhang. Okay. What's really fascinating is how this narrative didn't stay static. Towards the end of May, the market's outlook shifted again. We had a really strong consumer confidence print. The Conference Board Index jumped over 12 points, and sentiment around a possible EU-US trade agreement started to take hold. Trump hinted at progress, and the dollar gained over 1% just off a post he made. So again, the dollar sold off mid-month on soft CPI and fiscal concerns, then rallied again late month on sentiment and trade optimists. It was pretty much a back and forth environment, and we saw that directly translate into price action in the majors. Okay. So let's move on to the individual currency pairs. EURUSD. So EURUSD mirrored this dollar dynamic almost perfectly. We started the month with weakness in the euro. The dollar was strong, sentiment was risk off, and the Feds was holding steady. But when the downgrade came, the inflation softened. EURUSD rebounded. Then again, the euro lost steam to a month end, and ECB remained dovish, and the US data improved. Now, if you want to read all this, please do. I'm going to quickly move on to the next page, but pause it and then come back. We then got Great British Pound USD followed the same broad pattern. Although the pound has some extra support from stronger than expected UK retail sales and service sector inflation, those numbers suggested the Bank of England might not be in a rush to cut rates, which gave the pound a little boost. Okay, now as you see by the gold chart, gold was at a bit of a wild card. After hitting 3,500 in April, it pulled back as the dollar rallied. But given the risk backdrop, all the war headlines, fiscal fears, demand stayed elevated. By end of month, gold was still holding strong at just over $3,294. Okay. So, AUD USD performance, Aussie dollar. So AUD USD was especially volatile this month. The RBA cut rates, which pressured the Aussie. But at the same time, we had this temporary trade truce between the US and China. Since Australia's economy is heavily tied to US demand, the Aussie saw brief relief. Still, softer retail sales in Australia and a general strong demand meant AUD USD ended the month lower. All this contributed to the choppy risk conditions our systems were dealing with. Okay, so let's shift the gear and let's take a look at our systems actually performed in this environment. So we got the V44 and V12 mini. So V22 delivered a solid 4.31% return in May. Its mini counterpart posted 3.06% plus. Both of these systems that benefit from long gold trades, XAU USD trades, they were able to catch those directional swings in gold. Euro USD and AUD CAD also contributed positively, but on the long and short side. These subsystems are designed to export volatility, and this month gave us plenty. The hit rate was impressive, 69% on V22 and 81% on the mini. Most trades were held for less than a day, which helped manage risk in such a headline environment. Okay, so next, V31. So V31 had a good month too, returning 2.35%. It's worth noting that its profit factor was 1.69, which means it wins nearly 70% more than it loses. That tells you that the system was trading very efficiently. Euro USD, AUD CAD, NZD CAD were the main drivers. And once again, pause it if you want to come and read it. So we got XGB. So our cross-market system posted 5.49% plus. It caught the Bitcoin and Ethereum rallies perfectly. We had over 5 billion flow into Bitcoin spot ETFs this month. This was a big narrative behind the crypto momentum. And once again, if you want to read it thoroughly, please do. XKR and V17, I've got them both here. Both returned over 2 to 3% as well. Mainly trading volatile in Euro USD, USD CAD, and NZD CAD. These systems are great in range-bound environments, and that was the case through March and May, as you can see by the returns here. So V44 and V17, let me get V17 up, as you can see here. V44 and V17 were nearly flat, hovering around 1%. 33X was break even as I go to 33X. Actually, 33X here was about break even. Once again, please pause it and you can view it. I'm going to talk about it. These systems are still working off hedge exposure from April, which hasn't fully unwound yet, but they're still stable, controlled, and ready to scale as volatility normalizes. Okay, so Crypto 01 and Crypto 02. So Crypto 02 and we got Crypto 01 here. So now the real start of the show, Crypto 01, it returned just under 30% for the month. That's obviously exponential. It came from very clean directional moves in Bitcoin against the USD. The system isn't mean reverting like most of the FX strategies. So when crypto trends, it really capitalizes. Crypto 2 was also strong, up nearly 7%. Holding longer positions in both Bitcoin and Ethereum. Institutional flows drove both systems' performance. As you can see, you had the ETF there of Bitcoin spot, 5 billion in flows. It obviously helped everything. Okay, so just to wrap up, May was a month of conflicting macro signals, big political risk, and erratic flows. But in that chaos, we saw real opportunity. Our crypto systems thrived, our FX systems were adaptive, and overall, our portfolio stayed stable and responsive. If you want to get access to these systems or learn about how we structure strategies, risk, and capital allocation, feel free to reach out via the website. Otherwise, thanks for watching, and I'll see you in the next month for June edition. See you later.